Have you ever wondered what it actually takes to become consistently profitable as a trader versus all the rubbish you see online these days? By the end of this video, you will never question what it actually takes to make consistently entries and profits as a trader. With over 10 years of trading and 5 years of teaching students how to become consistently profitable, this might be the most important trading lecture you have ever watched. Now, if I can go back to when I start my journey, I wish I came across a video like this that will save me from making all the foolish mistakes I make when I started trading. Now, this is the second video on the series Beyond Redefined 2.0, and before the end of the series, you will never question what it actually takes for you to not only becoming constantly profitable, but staying funded and staying consistently profitable as a trader. You should ask yourself, is there any missing gap on why I've been losing money, to why I'm not constantly profitable, or why I've been blowing funded accounts? Because this person has been teaching for years and I've helped hundreds of traders make constantly profits. And not only that, but to keep their accounts. This video is not supposed to be free. Many have been asking me, Mr. Tammy, how do you trade? How do you enter the market? How do you analyze? And how do you get daily accurate entry? This is all what I'll be showing you, starting from the whiteboard here and to the charts. And it's very simple. I keep my chart as simple as possible, and what I'll be showing you is very simple and accurate strategies I've been using for 5 years now to make consistently profit. And I'll be showing you how to do this on gold, and this works across different pairs and different instruments. And you too can do the same. It's very simple. And by the end of this video, you know how to do all this A to Z. So this is the Ace Mechanics video I promised you guys, which is the second video for Beyond Redefined. And Beyond Redefined is a combination of both your strategy, your risk management, and your psychology, all which eventually makes you profitable as a trader. In this video series, that's all what we'll be teaching you. High accurate entry, how to keep your funding, and how to remain consistently profitable. These are all linked together. And starting from the Ace Mechanics, the second video on Beyond Redefined. The Ace Mechanics, how to get daily accurate entries using any pairs, any commodities. Now, the first thing we do first is the top-down analysis. Is the top-down. Now, on Ace Mechanics, the first thing is the top-down. We start from the daily. Now, after this video, Alan will be showing you his own pattern, how he do it. He starts with the 4 hours. For me, I'm starting with the daily. So, from the daily, we go to the 1 hour or the 15 minutes. So, I'll be using the daily, the 1 hour. That's what I'll be using. So, we have a good uptrend. This is an uptrend, this is a downtrend. Now, this works both on uptrend market and a downtrend. You know, the uptrend. Now, this is the structure of an uptrend market. This is the structure of an uptrend market. We have the higher high, higher low, higher low, and higher high. This is a complete structure of an uptrend. Now, you look for this on the daily time frame. First thing first, once you open your charts, you look for this on the daily time frame. Now, the market will be making either higher high, higher high. The market will make either higher high, higher low, higher high, higher low, or higher high. You know this is basic. Now breaking everything, even though you're a newbie, even if you're new to trading, you can understand. Now, this is very easy strategy, like I said before. And this is how I've been trading. I've keeping my charts simple for the past 5 years. And what I've discovered is the more simple your trading strategy is, the more you can make money in this market. So for many people that have been doing complex things, doing plenty lines, doing plenty things, and they're still losing money, they're wondering why they're still not profitable in the market. The market does not care about your trend line, about your analysis or the rest. The market doesn't care. The market only moves according to the way it moves. That's it. And you'll be learning all this very simple strategy to make money consistently. So once you get this, either on your daily time frame, either the downtrend or uptrend, once you know that, okay, this is a complete uptrend or downtrend, you look for buying or selling opportunities according to the trend of the market. Now, if you're in an uptrend market on the daily, you look for more of buying opportunities. This is some of the basic concepts you've already been hearing about. And if it's on a downtrend on the daily, you look for more of selling opportunities. You look for more of buying opportunities. And if it's on the downtrend, you look for more selling opportunities. Now, this is some of the basic concepts you've been learning about for years, and it's valid. It's not bad one. So what you do is you go down to the either the 1 hour or the 15 minutes, and then that's where you enter. That's where you execute. You execute on the 15 minutes or the 1 hour, and I'll be showing you there in a few minutes on the screen. I'll be showing you how we do it. A few minutes time on the screen. What do you look out for? The first thing you look out for on your daily time frame, once you have identified whether the market is on an uptrend or a downtrend, the first thing you do is you look out for number one, gap. You're looking for the first thing you look out for are gaps. Now you know gaps. Now what are gaps? Gaps are those imbalance or space. I want to break this in a very simple time everybody can understand. Gap is that space that the market leave once a session opens or closes, especially the midnight for those on West African time. The midnight getting to another day, you see that small space the market give or imbalance, or when a news event happen, the market usually give that gap. Now it makes something like this, and it gives space and start going up too before coming down. Now the market, now this point here is a gap. Call this a gap. Now these are the first thing you look at for on the daily time frame. You can have that on the daily time frame. If you see it, poker. Now you look at for gap. You look at for second thing you look at for big moves. What are big moves? Big moves is 3 to 4 bullish or bearish candlestick side by side going either upward or downward without any retrenchments. Those are big move. This is a big move. The market doesn't make any retrenchments, just goes down. Same way when it's bearish, when it's bullish. Same when it's bullish, the market just make a long 3 to 4 candlestick together without any retrenchments. The market doesn't correct. Those are big move. It makes 3 to 4 candlesticks together. Those are big move. That is the second thing you look at for. The third thing you look at for are long candlesticks or big candlesticks. That's the third thing you look at for. Now, sometimes you can wake up and see there are 3 candlesticks side by side, and there is one big one. Same way in a bullish market, you can see the market might be going like this, and you see one big candlestick going up. That is the third thing you look at for. Now, the market will always come back to those points, to either the gap or the big move or the long candlestick. The market always comes back to those points. Now, this is something very simple anyone can do. Like I said before, the market always come back to hit that point. And in a few minutes time, I'll be showing you some instance on gold, on the pair gold. Right now, I'll be going over to the chart and be showing you some instance where the market did this, and for some of the trade we took last week on gold. Let's go. And this is what gold have been doing for the past few weeks, and this is a good uptrend. We have higher high, higher low, higher high, higher low, higher high, higher low, and higher high. And these are some trades we have took over the past few weeks, and I'll be showing you. Like I told you, once you open your chart, the first thing first, you go to your daily time frame. Now this is the daily time frame on gold, and this is what gold has been doing for the past few weeks. Like I told you, the first thing you do is go to your daily time frame and check for the trend. Now this is the daily time frame on gold, and this is an uptrend on gold, a very good one. And this is what gold has been doing for the past few weeks. Now you can see we have some higher high and higher lows, higher high and higher lows, and these are some trade we have been taking on for the past 2 weeks. So in the next few minutes, I'll be showing you how we execute and what we did. So we have identified our trend, and I'll be diving in how we executed the move. So after observing our trend, what are we looking out for? I told you first thing we look out for gaps, big move, and long candlesticks. So where are the gaps here? Where are the big move? And where are the long candlesticks? We identified them. Now this is a long candlestick. We saw this, we saw this, we saw this, we saw this, we saw this for the past 1 week. For the previous, we saw this. This is a big move. This is a long candlestick, also a book move on the lower time frame. This is a long candlestick. We saw this, we saw this, and we saw this. So we have identified the big move. There's no gap on gold. Gold doesn't really make gap much. But if you go to a lower time frame, like 5 minutes or 1 minute, you might see gaps. But on this daily time frame, you won't see gaps much. So we look for big moves and long candlesticks. So we have identified those big moves. Now is to go to the lower time frame, the 15 minute or 1 hour. We're using the 1 hour for execution. So go to the 1 hour. So this is a 1 hour time frame. You have identified the bias, you have identified the trend on the daily time frame. The trend on the daily time frame is an uptrend. So what are you looking for? That means you're looking for more buying opportunities than selling opportunities. It doesn't mean there won't be selling opportunities. Like I always said, the market will eventually goes where you want to go. But what I'm teaching you is how to get high accurate entry. That's why your risk management and psychology are next to say this. It's part of what will eventually help you to stay consistently profitable as a trader. So we looked for we saw the big move. We saw this. We saw this. This is one of the big moves. We saw the market tap into this point. It went down. It goes up. Now this is another big move on the 1 hour time frame. What we are looking for on this lower time frame now is the market going back into, like I told you, big move, gap, and long candlestick. The market will always retest those places. Now this area here is a big move, one of the big move. You can see the market came back here 3 times. This particular one, the market has to come back here and touch it. Now you can see after the market goes down, it went up, rallies up, it made some big move. This. The market have to come down to fill both this and this. And once the market tap into this zone, you have your first buying opportunity. You have your first buying opportunity right here on this move. So once the market tap into this place, we took our buy trade. There. That was a few days ago, and we took these another buying opportunities also. The market made another big move here. What you have to do, like I said before, you wait for the market to retest back into this big move, this long candlestick. The market will have to come back again. Now these are all buying opportunities where you can execute buy trade on one single day. You can see this on the 15 minutes time frame too. You can also get it accurately on the 1 hour time frame, anyone you want to use. So this is some of the trades too we took. Now this is another trade we took. The market, what did the market do? The market made a big move here. It came back to retest and hit this place to cover for this. And what do? We took a buy trade, you can see. And this is where risk management comes into play again. Like I told you, we took a 1:3 trade on this. Same thing happened on still this big move. You can see this big candlestick inside there. The market will come to fill that place back. The market rallies up. It did its thing. It came back at this same point, this zone. You can see the market hit this place. Now that's where the risk management comes to play. We took a trade. Now the market gives us another good opportunities here, which we took, but we lost this trade. Eventually we lost this trade. It was a nice setup, but we entered too early. And that's another thing. Like I said before, there's no perfect strategy, there's no perfect analysis, there's no perfect entry. All those are myths. If you make loss, you can see we took this trade but we lost it. It eventually lost. We entered too early. It still went down to hit our stop loss before it rallies up. Now this is a very good entry at this point. It made a very good move to enter, but then it still hit our stop loss to go and went back. Maybe we entered too early. We don't know. The market is what we decide. Now listen to this. This is where many people made or get it wrong. I've said this times with that number. There is no perfect entry. There is no perfect signal. There is no perfect anything. the market will eventually go where it wants to go. And that's why your risk management is very important in this business. See, you cannot tell me that you can do this consistently without having a good and efficient risk management. Is very, very important. What's the most important thing in trading? And that's another thing that comes with psychology. And we're talking about that in the next series of video. You have to stay tuned for it. Now, we took this loss not because we didn't enter it perfectly. That's not like perfect entry. We enter our trade correctly and follow our risk management and still lost. And that's where risk management comes to play. We know how much we need to lose and we sacrifice it. We can lose $20, $50, but we know eventually we'll cover that in the next consecutive trade. So we'll let it go. You don't feel bad for losing. And if there's any YouTube mentor, any mentor telling you somewhere that your strategy will be perfect, that he or she doesn't make loss, it's all a sham. As a trader, you must make loss. Every good trader makes losses, and every good trader is supposed to know losses as normal as taking profit too. It's normal in trading. You don't have to be shy about it. So the market eventually still come down to fill this place at this point. We'll let it go. We didn't took this trade, but this is another good place to take another trade. So after this place, the market rallies. It didn't really show us any good move. It didn't show us any good move for some time until this very point here where it made this big move. It made this big move. It came down. It hits this point. It hits this point again. You can see it came down to retest this big move again. This is your second opportunity. This is your third opportunity to buy. You can see at this point you can take a buy trade and you still be in profits as of now. Okay, I have to show you something also. So within this, we say we are looking for more of buying opportunities, but within this uptrend market now you can still get selling opportunities. You can see gold indeed make a gap. You can see a gap that gold made at this point. There was a gap here. You can see a gap at this point. Let me bring it down for you. There was a tiny gap at this point. You can see a tiny gap here. There's a tiny gap gold did at this very point. So that is a selling opportunity. I told you the market is always come back to filling gaps. What I told you, the market always come back to filling gaps. What are we looking for? I told you, you look out for gaps, big move and long candlesticks. Now this is example of a gap at this area. There's a gap here. Gold did a gap here, and that's a good selling opportunities. Now once you see this huge candlestick here and you see that the market is suddenly coming down to this point, you can take your sell trade. What did the market eventually do? It came down to cover for this. Come down cover for this. You can enter short entries here as you can enter short sell entries at this point. So that's a selling opportunity for you on this point. At this point now, we are back to this point now. At this point now, we have seen gold made this big move. We have seen gold make this big move, make another big move here, another big move here. The market has tested it here and tested it here. We took a buy trade. We can place a buy trade at this point. So we are expecting to rally up at this point. I'll be using 1:3. Depending on your risk management is very important. I'll be talking about that consecutive video. So these are expectations for this for next week on gold. These are expectations for next week on gold. We're expecting it to rally up. It can come down to take us out, but we still have our buyers who know what you're doing, and we have our risk management to always cover for us. There is always an entry, there's always more entry, there's always more time to perfect and cover up your losses, and that's what you entry and that's what you being in the market executing trade can give you. So you're not supposed to be scared of taking entry. You're not supposed to overthink it. Yours is to come to the market daily. If you can do all this, you can enter daily trade and get daily entries. So this is how the first way we do it. And after our coach Alan will be showing you his own method on how you can still get more daily entries, more scalp entries, high accurate entries.
Before you enter your platform, you have to know what you're looking for. Yeah, so this is what I'll be showing you all here. When you open your chart, you won't just be all over the place. You won't try to be all over the place, because if you want to be all over the place, you end up messing things up. Yeah, you have to have specific concepts and indications you'll be looking out for. First, I'm going to start my analysis from a higher time frame, because the higher time frame is king, macro is king here. So I'm starting from H4. When I get to my H4 time frame, what I'm looking for is major swing points. What to look for? Major swing points. That's the highest the market has been and the lowest the market has been. You can call this your resistance zone and your support zone. You can see here's my resistance, here's my support. My resistance now is because the market is going down, because this is a market that is going down. Yeah, because this is a market that is going down, I want to trade in the direction of the market. H4 is selling, so you also want to be selling with H4. You get? So you can see market made a lower high, a lower low. It made a lower low here, made a lower high, lower low. Market took out this previous low to make a new lower low. So it's obvious that this market is selling. So now I've identified my POY. What is POY? POY is your point of interest. Like I said, it could be your support zone, it could be your resistance zone, it could be your fair value gap, it can be your other block and all. So now once I identify my point of interest, yeah, I'm waiting for market to retrace back to my point of interest. You have to be patient as a trader. Some of you know that you want to be selling this market, but once you start seeing this retracement, you will be tempted psychologically to start buying, and you end up getting stopped out. So as a trader, you have to be patient enough for market to get to your point of interest. So now once market gets to my point of interest, what am I looking for? I'm looking for what we call MSS. That's market structural shift. I want to see that, okay, this is a buying market, the retracement is a buy. I want to see something on a lower time frame telling me that this buy market is running out of fuel, that we're at a major key level of supply, a major key level of resistance, and I want to see something like this, a market structural shift. That's what's called MSS. So now it was buying here, the correction was buying, and now it has gotten to this our point of interest, and we can see that the market is no longer buying. That is now showing features of a bearish trend coming into play. That's what I want to see. I want to see a higher low get taken out. I want to see market structural shift. I want to see that, okay, this market is no longer buying, that this market has started selling. And what I'll do is I'll just wait for a retracement to this range. Then I'll take myself from here. I can choose to take my profit here, the first swing low of this corrective move. And now I'm not just looking for MSS. MSS is one of the things I'm looking for, one of my entry criteria. But if market doesn't sweep IDM, that's inducement liquidity, you know that market will always do this. Market will do something like this. These are early sellers. If you look at this, you see that these are early sellers. These sellers got here early. Yeah, they got into this trade early. Market ended up sweeping their stop losses before going all the way down. So that's just what I simply mean by IDM inducement. You can see it happened here. Market got here to this zone, but it did not mitigate this our point of interest. It did not close the orders that are here. It did not mitigate before going down. So they were early sellers in this zone, and actually market gave them some profit here. But if they closed here, they would have gone with their profit, but some will still choose to hold. I don't know, maybe because of greed. Greed is a psychological issue. As a trader, your psychology is important. your risk management is important. Now markets eventually got up to this place, and you can see how it swept through this low, it swept through this inducement into our POY before ultimately going all the way down. So yeah, I'm also waiting for a brief period of inducement. I'm waiting for inducement to be swept. I want to see liquidity being taken out before I actually participate in this initial sell move. Now this is for my macro structure. That's for my higher time frame structure. Yeah, this is for my higher time frame structure. Now let's say I want to scalp. Yeah, let's say I want to scalp this market. Following the initial trend. Let's say we're on H4 here. H4 is still selling, and all, and I start seeing something like this. Now I won't be on the H4 time frame. I'll just pick out my resistance. I'll pick out my resistance zone. Here is still resistance. Now I'll head down to, let me say, a 15-minute chart, a 5-minute chart, a 10-minute chart. I want to see bullishness coming into play. I want to see that, okay, market has gotten into this key level of, let me say, support. And the sellers no longer have power. I'll be waiting to see something like this, a higher high, this is a higher low. This obviously this is our lower low, lower high, lower low. I want to see something like a higher high, a higher low forming on the lower time frame. Let me say 10 minutes, 5 minutes. 1 minute is too noisy, so just preferably 5 minutes, 10 minutes, 15 minutes. Yeah, I want to see something like this. I want to see markets start taking out highs. I want to see markets start taking out lower highs. You can see market took out this lower high here. To form what? A higher high. This is a strong indication that bullishness is coming into play. So I want to scalp this market. I'll wait for a retracement, maybe into a key level of demand or support. Yeah, I'll wait for market to come here, and once market come here, I'll start buying. I know that I can buy on a time frame like M5 and hold all the way to H1 supply zone or H4 supply zone. I can buy and hold. I can choose to take profit here at this initial high. I can choose to take profit at this our H4 lower high. So yeah, what I'm basically saying is that when I'm scalping, I want to see a move on a smaller time frame that is opposite to the higher time frame move. Let me say H1 is selling, a time frame like 1 hour is selling. I want to go to M5 at that current price action. I want to see a build up of bullishness, contradicting that buy, and I want to start entering when I see that, okay, a new trend is established. That's the correction. If H1 is selling, definitely the correction will be a buy. Like here, it was selling here, so the correction will be a buy. And in scalping, is a correction. I'm trading the correction. So if like let me say H1 is selling, the correction will start on a smaller time frame, M1. It will build up to M5, M15, M10. So once I see an established trend on a lower time frame, that's when I know that, okay, I'll start taking scalps here. I can choose to keep my RR 1:2. I can choose to keep my RR at 1:3. Don't be greedy. Take what the market gives you. This is just like a rough sample, a rough work of what I'm trying to say. I'm going to show you a a more explanatory example on the chart. So let's hop into our chart. Okay, like I said, once you get on the chart, you don't want to be all over the place. You want to get the swing points of the market. That's your support zone and your resistance. So you can see that market made a swing high here, it made a swing low, and this low made a high. This high created a low that took out previous low. Okay, so now we'll start marking our zones, our resistance zone. You can see here that there was a resistance at this place. Market came here and showed a rejection. So you can see I've already highlighted that out, and coming here we could see market made impulse correction. So market is no longer, the market has taken the orders that were there and it proceeded lower. Same thing, it made an impulse here and it made a correction. Market took out the orders there, impulse correction. Now you can see this impulse move that took out this previous swing low. This impulse leg took out this previous swing low to create a new lower low. I now notice something about this low, that this low that was created, market showed rejection here. You can see that it came here and broke this high. It broke this high with bullish momentum. I now knew that, okay, since I'm on a 4-hour time frame, I want to trade in the direction of the 4-hour. I don't want to go against the 4-hour. I waited for market to come into my POI, my point of interest, or my resistance. Anyone is the same thing, don't get confused. So you can see market got into my point of interest and it showed this rejection. It took out this low. It proceeded to make a lower high, lower low, in accordance with the main H4 structure. It made a lower high here, which proceeded to make a higher low, going against this initial bullish trend. You can see that it made a lower high, it made a lower low, it made a lower high. So this is where I would have been looking to take my short from. This is how I'll be looking to short this market from here. Maybe my stop loss can a little bit above my resistance zone. My take profit, I'll want to keep my take profit at 1:2. Let me shift that a little bit. Yeah, I want to keep my take profit at 1:2, and we can see that market, it didn't really hit our TP at 1:2. But understand one thing too, inducement. You can see that there were people that were selling this market here. They sold early. These are early sellers, these are early participants, and smart money always want to take out early participants. You can see how it swept through this high. If you go, you see that there was selling pressure here. Sellers were here. There were people willing to sell the market at this price, and they were actually selling, and you can see that it gave them profits. Yeah, but market eventually retraced and took them out. You see this big momentum candle that took them out, and it got into our point of interest after sweeping liquidity. That's liquidity is inducement, it's the same ideology. So after sweeping liquidity, it came down, made a lower high, made a lower high, lower low, lower high, lower low. So I took my entry at here. Stop loss a little bit before this high. Always give your stop loss room to breathe. So market ended up going retracing, and Its market got to this place. Initially I took all my profits here at this zone. Why did I take all my profit at this zone? Because I started seeing bullish pressure again. Now market will move impulse correction, impulse correction, impulse correction. So that's what happens here. When I was on a lower time frame, why I exited early initially is because of this setup on a smaller time frame. You can see that markets made lower low, lower high, lower low, lower high, lower low. This is a lower low because it still took out this low with momentum. Now you can see that market took out this high. In a bearish trend, only the lows get taken out. In a bearish trend, only the lows get taken out. If a lower high gets taken out in a bearish trend, then that trend is no longer bearish, it's now bullish. So this is one of the ideologies that guided me to exit that early. Now this is where I can look to scalp. I can start scalping from here because I know that these buyers now are coming into this market. So market made a higher high here after taking out this previous lower high. It made a higher high. It came down here, and you see it didn't close here with momentum. It didn't close here with a momentum candle. If market closed here with a momentum candle, I wouldn't have taken this buy. But see what happened. Price came down here and it rejected and closed above this zone to the upside. Market showed rejection from here, true rejection from here. And I knew that, okay, since market is showing rejection from here, the first entry criteria was that I got a break of structure here, or a microstructural shift, or a change of character here, and market made a new higher high. Second entry criteria was that market got to this our swing low. This is our swing low, this high is our swing high. So market got to this our swing low and showed rejection. Market did not close below this low in momentum. It showed rejection. So this was another thing that made me get into this market. You can see I entered when market got here. I entered quickly at 1:4. Okay, my arrow was 1:4. I kept my SL. I gave myself small room to breathe. Always give yourself small room to breathe. Now I can start scalping. I can choose to close at 1:2. I got 1:2. I think I got 1:2 already. I got 1:2 here. I can now choose to hold. I can choose to hold to let me say a H1. Yes, I can choose to hold till I can choose to hold till this H1 resistance zone. I can choose to hold to this H1 resistance zone. I can choose to keep my RR at 1:2, 1:3. See that I have a plan. I'm not just entering because of entering said, or because I'm impatient. I have a plan for everything I'm doing. I can choose to hold to here. You can see the market is already racing towards this place. We are currently in Asian session. So you can see the market is kind of slow. Volatility is not really there. We might be getting good volatility at, let's say, London session. But this is my final take profit at this zone of resistance, because market will definitely get to this zone before choosing to break up or continue this initial trend down. So this is just simply how I scalp. I've explained how I enter and try. I've explained how I take my intraday entries and my swing entries.
And so guys, this is how we get daily scalp signals and entry on our family group back to back. And this is what we have been doing for the past 3 years, and I've been getting high accurate entry. Like I told you before, you learn mostly by entering trade, executing, and being in the market. That's how you learn the most, not by waiting. There's no perfect entry, there's no perfect signal, there's nothing perfect in the market. And even with minor losses, if you have the right risk management and psychology in the business, you can still be consistently profitable. And in the next 2 series of videos, this is what we'll be teaching you how to not only trade and get entries like this, but to stay consistently profitable and stay funded with the right risk management and psychology. So see you on the next video.